Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman here with Jackson Mikalic. Thanks for joining us today.
Thank you. Appreciate you having me on.
Absolutely. Could you tell us a little bit about your background, your journey to Bitcoin, and your journey to Onramp?
Yeah, absolutely. So my background is in alternative investments. Worked in finance for about 8 years now, mostly in New York. I'm now based in Philadelphia. Alternative investments is a really broad way to bucket asset classes. I think traditional finance should consider maybe updating the lingo there, but alts typically refers to anything that's not equities, fixed income, and cash equivalents. So in my career, I've been on the agricultural side and farmland, been focused on hedge funds and long-only limited partnerships, and then all of the private asset world, like private equity, venture, credit, et cetera. For me, Bitcoin comes into play mostly in 2020. I was aware of it. I owned a small amount of it before then. But 2020 is when things really clicked for me. And that was because I was sitting in a alternative investment due diligence seat. I was speaking to fund managers on a daily basis, effectively vetting out their strategies on behalf of our ultra high net worth clients. And I was speaking to folks with all sorts of strategies, and we all know what happened in 2020 with the coordination of fiscal and monetary authorities and just the trillions of dollars and euros and yens and all the currencies just pumping into the system and sending all asset classes up and to the right. And so that caused me to dig in and better understand, well, what are actually the macro forces at play? And ultimately, if liquidity and these bigger macro forces are driving asset class performance across the board, then Bitcoin is something I should consider more seriously because it's traded in the past as a proxy of liquidity. It's obviously, in my opinion, the best hedge against debasement, which will only continue to accelerate here. So I started aligning my personal capital more seriously to Bitcoin in 2021. I'll save you a couple of years, but I ended up at Onramp in the early summer of 2023. I actually reached out to Jesse on Twitter, cold before the business was even announced. I just messaged him on Twitter. You can just do things, right, Tim? So I just shot him a DM on Twitter and said, I'm really interested in the work that he's producing at the time. He was producing excellent Bitcoin research and macro content. Onramp hadn't been announced. I said, I'm passionate about this. This is my background. And I didn't hear back from Jesse for about 2 months, and no fault on him. If anyone looks at if anyone has a Twitter following and looks at their inbox, it's just spam constantly. But funny enough, I reached out to Jesse in, let's say, March of 2023. Onramp's announced in April of 2023, and then I was really excited about it. I heard the podcast that Jesse, Michael, and Marty did on TFTC, and then Jesse actually got back to me in May of 2023. And said, let's set up a time to chat. So I met with Jesse and Michael and then ultimately ended up joining the company. Like I said, summer of 2023 as the first employee.
Wow. First employee number one.
Yeah.
There's only one person that can ever say that.
Yeah, it's special. I mean, it's been fun to be part of the ride since the beginning with Michael and Jesse. Not the very beginning, of course, they're the co-founders. And they did all the legwork to get the business up and running for the announcement in April of 23. But it's just incredible to see how much the business has grown since I joined about 18 months ago.
Can you talk a little bit more in depth about that? Because as I'm on my own individual journey with MIC, as we call it, multi-institutional custody, it hits me that we're kind of where the puck is about to go. But when you see posts from very prominent people in the Bitcoin community about them moving their Bitcoin into an ETF product, it just signals to me, at least, that we're just super early. I mean, really, before you and Michael and I started talking, I didn't even really know that multi-institutional custody existed or why it was important. Like, where in this whole adoption of this technology, meaning multi-institutional, are we? Are most people even aware of it, or is that too dramatic of a statement?
Yeah, well, I always anchor back to the idea that people say we're early to Bitcoin, right? And so I generally agree with that sentiment. It's an asset that's been bottoms up. 70% of Bitcoin is owned by individuals. So about 1.4 trillion of a $2 trillion market sits with individuals. Those individuals have been on the frontier of vetting out innovative ways to secure and utilize your Bitcoin holdings. And so if we're early to Bitcoin, that also implies that the solutions that have existed to date have also been for early adopters. And so the way I think about this, Tim, is consumer grade hardware wallets, as far as I'm aware, came on the scene in 2014 with the Trezor Model 1. That was the first like mass market hardware wallet that was available. And the
Mhm.
price of Bitcoin was $500 at that time. And so naturally, then anyone who came in, let's say 2014 in the following years, a lot of them purchased Bitcoin on various exchanges. Coinbase was one of the few, let's say, reputable and institutional grade exchanges that existed at that time. As investors get more educated, naturally, there's that sentiment of people want to remove the counterparty risk, right? So what we saw was investors started demanding and looking for other solutions. There was a market need for other solutions to not leave your Bitcoin on an exchange and not be compromised, by a hack, insolvency, et cetera. So self-custody kind of grew in parallel by this bottom-up adoption of Bitcoin, started with the consumer grade devices in 2014 with Trezor, and then naturally other solutions came to market like collaborative custody, which I think really started to play a critical role in helping people secure Bitcoin when it was $5,000, $10,000, 20, 50, et cetera. And then so what we do at OnRamp, I think of the standard for securing six-figure Bitcoin. The reality is what worked when Bitcoin was 500 bucks, 1,000, $10,000 doesn't work going forward. And so we are very early. OnRamp, like I said, was officially announced and launched in April of 2023. So we've been in the market for about 2 years now. And then, of course, there was a ton of work that went into that before, just in terms of Michael and Jesse and others' backgrounds, building other businesses in the space. And so we are really early. Of course, we've seen a tremendous amount of growth over the past 12 months. People are looking for more redundant solutions. But to your point, do people know that MIC, multi-institution custody, exists? Not really. I mean, most people don't, right? Most people don't know anything about Bitcoin, let alone ways to secure it. So it's
Mhm.
extremely early. I have another thought on that too. I wasn't surprised to see Plan B mention the ETFs. I think this is just it's a very logical thing. And some Bitcoiners might think I'm an idiot for saying that, but if you actually work through it, if you're someone who has a high profile in the space, even though he's anonymous, we all know that people can piece together information. You're high profile, you have likely a very large allocation to Bitcoin. You don't want to have millions or tens of millions of dollars of Bitcoin easily accessible to you. That poses all sorts of risks to yourself, to your family, human error, physical threats. How do you access financial services? So I actually wasn't surprised to see that tweet. I think it makes a lot of sense in some degrees. I also think it doesn't make a lot of sense for many reasons because ETFs at the end of the day, opaque, single party custodian, paper claim, can't get Bitcoin out. So there's a lot of trade-offs there as well. But I think that's the issue is you either get funneled into managing this all yourself and having to figure it out, or you just have a financial product that's not true ownership of Bitcoin. So there's very little that actually sits in between that.
Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent institutional grade custodians, none of which have unilateral control. Multi institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. Can you walk us through setting up an OnRamp account? Like, how long does it take? What all is involved? Is it 20 minutes? Is it 3 hours, since it's different from just kind of filling in your information on a page online and having a single custodian. This is, totally different.
Well, it's funny how much progress we've made over the past 2 years. It used to be a pretty painful process, to be honest and transparent. You can imagine the complexity that's required to set up an account where you have multiple independent institutions participating in securing the asset on your behalf. So it actually used to be quite manual, like 18 months ago, manual process, took a while to complete. We're at a point now, and we have been for a while, where investors could set up accounts in a matter of minutes. I would say, depending on how quickly, urgently you want to move through it, it could take you 15 minutes, it could take you 30, it could take you 5 minutes. And so that was a lot of hard work from the operations team, the engineering team, sales, et cetera, to abstract away all the complexity. Because what's happening in the background is the client's setting up an account with us. They're predominantly working with OnRamp. Like we're an extension of them at managing their asset, right? We help them to navigate this. They're going to reach out to me or Michael or Cam, whoever. But there's still other institutions involved. And so what's happening, you set up an account, it might take you 10 or 15 minutes, but you're signing legal arrangements with other institutions that are not OnRamp as well. And yeah, I mean, it's all embedded. It's easy to move through. And I think it's just a testament to the team working hard to operationalize this and make it commercial and make it easy for people to access.
Can you talk about what options a customer would have for verification before assets move?
Yeah, so out of the box, what's required is a client will video verify with OnRamp and then separately with BitGo. It sounds more complicated than it actually is. Let's say, I actually have an OnRamp account, right? So I use OnRamp for majority of my Bitcoin, and I can speak to as to why that is, but maybe it's irrelevant right now. I have an OnRamp account. If I want to move zero point 0.1 Bitcoin to a cold card, or I want to move zero point 0.1 Bitcoin to a family member, what I need to do is I initiate that withdrawal through my platform or through my account, and I have to do a video verification with someone from the OnRamp team. So we have to have a live conversation. They need to make sure that it's legitimate. It's Jackson on the other end of this. So they're a process operationally to verify this. And then that is the first signature that's required because it's a 2 of 3 multi-institution vault. And so then after that's done on the OnRamp side, then the client, so in this case myself, I would have to video verify with the BitGo team. And so they're independently verifying my identity, I'm not under duress, et cetera. And so then they're providing that second signature. What some of our clients might opt for as well is requiring that first piece, that video verification, to be done in person. So provide that option as well, where clients could actually sit down with us in an office setting, and we could do that instead of video. And then we also have other things in the pipeline as well. It's not an imminent concern, but you have to be adversarial when you're building a Bitcoin business. So at some point, video may not be a way to verify identities, whether that's a year from now or 3 or 5 years. But there's other things we have behind the scenes we're working on to mitigate those risks. But right now, video verification works. And then some people opt for in person for larger sizes.
Can you talk a little bit about how multi-institution custody enables financial services on Bitcoin? Because when you hold it in self-custody, you, of course, would not have any financial services.
Yeah. I mean, so you kind of answered your own question there, because with self-custody, the merits of it, Tim, are probably widely understood by your audience, but at the end of the day, it's self-sovereignty, right? People who don't want to have any counterparty exposure. They want to ensure that their Bitcoin remains in their possession and they safeguard it. There's a lot of reasons why so a lot of investors don't want to do that. And one of those is because you can't really access financial services, right? Like you're sitting on a proverbial island with your device and your seed phrase, and how do you access Bitcoin-backed loans with that? How do you get that insured? I mean, there are some solutions that are being brought to market, but then how does that insurance policy actually cover that? And how do you get a claim on that, et cetera? And so it's just it's the early stages of the market developing still. So when you manage the asset, the benefit is, well, all right, I'm doing this myself. I don't have my Bitcoin on Coinbase or Kraken or wherever. But the flip side of that is, well, I have a lot of my wealth in Bitcoin. How do I borrow against that, right? Like, how am I going to be able to do that? So what multi-institution allows for is really the first third-party custody implementation where you don't give up control of the asset. Because if you think about, if you open up a Coinbase account, you have Bitcoin in there, you're ultimately working with one institution. They have a process. And the issue with many of these actually is that they over-index now because $300 million of Bitcoin is stolen out of Coinbase every single year. So now when there's good actors trying to move Bitcoin out of their Coinbase account, there's all sorts of roadblocks put up. It takes forever to move Bitcoin out. And so what we're doing is this third-party solution where you still have control of the asset, because when you onboard at OnRamp, you're setting up an account in your name or in your trust name or your business name, and you or anyone else you want to authorize in your account are the only people who actually control the Bitcoin that can move Bitcoin out of this multi-institution quorum. Now, it starts to get interesting with financial services because the big one is inheritance. How do you actually manage inheritance for self-custody? Well, you leave your family a treasure map. And it sounds like a little bit in jest, but it's actually serious. People are leaving their family instructions and devices and seed phrases. And in a lot of cases, it's the male, right? And they have a wife and maybe children or grandchildren, depending on how old they are. And they're leaving their family these instructions, and it's actually a total disaster for most people. They're the only person in their family that knows anything about this. It's like if someone in your family never shot a gun before and they need to defend themselves and they're trying to figure out how to load the rifle and you use it, right? Like it's the same thing with self-custody. You're leaving your family this burden. So what we allow for is really three things on the inheritance side: and access to the asset. So your family, you can designate beneficiaries directly on an account, ensure that they have seamless access to your Bitcoin. The second piece is the legal title. Just because someone can access Bitcoin keys doesn't mean that they're legally titled to them. The third would be with beneficiary designation. You get a step up in basis for your heirs, which is actually critical. So it means that your heirs inherit the cost basis of the asset at the time of death. So if your Bitcoin cost basis is 20,000, but you pass away 5 years from now and the price of Bitcoin is $650,000, they inherit that cost basis. So that's one thing on the inheritance perspective. Another would be accessing liquidity, Bitcoin-backed loans. Think about this from a lender perspective. You have three keys, three independent institutions. None of them control the asset. None of them can lose it. None of them could be compromised. Extremely attractive for parking collateral in this solution. And then same thing from an insurance perspective. From an underwriter perspective, well, again, you have three independent institutions, can't lose it unilaterally, can't be stolen, can't be hacked at one institution, et cetera. So you start to have this new design surface where you can actually access financial services, which people increasingly want to do, right? They want to protect their Bitcoin for the long term. They also want to be able to utilize it when it's 200,000, $500,000, $1 million, et cetera.
The Bitcoin for Corporations Conference is coming to Orlando May 6th and 7th. Receive 20% off admission by going to microstrategy.com, selecting Bitcoin for Corporations, and using discount code KOTZ at checkout, and I'll see you there. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. One thing that surprised me in one of the conversations I had with you guys recently was that, and maybe I'll caveat it with, like, markets are dynamic, so things could change tomorrow, later this afternoon, next week. But OnRamp is, as far as we know, like the only company that's focused on multi-institution custody. And of course, right, things can change, but it seems like other service providers are more focused right now on what's it called again? It's like they hold a key or they hold two keys and you hold one, the company holds one.
Collaborative custody.
Collaborative custody. So like, can you give us a little bit of that landscape just from an educational perspective? Like you have self-custody, you have collaborative custody, you have single point of failure custody, both on the self-custody and the, if you have it in an ETF or on an exchange kind of perspective. And then you have, maybe I already said it, multi-institution custody. So there's like a lot of, several, at least several different things going on. And if I wasn't aware of it for years on end, I can only imagine that other people might also be kind of coming up the curve on all of this.
Yeah. So to take a step back, it kind of ties into what I said earlier, but let me give it a little bit more detail. It's an evolution, right? Like similar to how one would access the internet and what applications and hardware and software were being developed. Everything evolves over time, right? You're able to, this is a new technology that's monetizing in real time. So with the assumption that we're early to Bitcoin, again, I think we are, what we've seen then is this evolution where it did start with exchanges and ways to buy Bitcoin. Or first it started peer-to-peer mining, but then soon after that came and that allowed for initial more mass retail adoption. And what we've seen now, Tim, is that investors who have allocated to Bitcoin or want to allocate to Bitcoin in size, they have to grapple with all these trade-offs, right? So like the way this has evolved is first it became single sig, and still people use single sig. There's nothing wrong with that if you're comfortable with the risks and responsibilities of doing so.
And what is what is single sig?
Yeah, so single signature.
Okay.
And so what that means is like it's a one-to-one relationship between the public key and the private key.
Okay.
Thanks for asking that. So if you lose the private key, right? And so what that means for a retail investor, if you lose the seed phrase, you've lost the Bitcoin, right? It's a permanent loss of capital. And so there's a lot of nuance that goes into managing the asset, and it's not for everyone, and it's actually not going to be for most people going forward. Collaborative custody, what you described, is the idea that you're levered. It's really the first consumer grade application of multi-signature. Mm-hmm. And multi-signature is, again, multiple signatures, multiple keys. Okay. The idea being, if you lose one of these keys, it doesn't result in a loss of capital. So there's several collaborative custody providers now. Some use 2 of 3 multi-sig quorum, some use 3 of 5. But the idea is that you have 2 of 3 or 3 of 5, so it leaves some room for error, for margin. And so you typically have an institution that holds a minority of that key set. So let's use a 2 of 3, for example. You have an institution that holds 1 key, the end client holds 2. They still bear the responsibility of the key management. Their family still needs to figure this out. They still may not be able to access financial services. But if they lose one of the keys, or their firmware has to update and there's a bug and they need to order new wallets, all this complexity that could happen, it doesn't mean they're knocked out of the game because there's multiple signatures. And so you have the kind of like an institution to lean on in your time of need. But ultimately, if you're using that, you need to know how to use that without relying on an institution. It's ultimately your responsibility because you hold most of the keys. And so what we do at Onramp, and we're the only people that are really planting the flag that multi-institution is the standard for Bitcoin custody, especially at 6 figures and beyond, is we're taking multi-signature and we're just providing a new format or flavor to that. So rather than the keys being held by the individual, keys are held by independent institutions. The way we have this set up is 3 keys between 3 independent businesses. Each institution holds 1 key. And so we're still using technology, multi-signature, that's native to Bitcoin. It's part of the Bitcoin tech stack. It's not proprietary, but we're just providing a new way to interact with it. We're providing a new design surface of multi-signature. And so we're the only ones that really have planted the flag. To your point, there's a lot of firms that focus on collaborative custody. There's a lot of single party exchanges and custodians. We have a view of the future that Bitcoin as a decentralized asset will mandate and require decentralized security of it. I will pick on Coinbase again, not because I think that they're bad people or bad company, but it's an alarming centralization risk, in my opinion. You have one institution that holds like five, six, $700 billion of digital assets. They have, I think, about $2 million, 2 million Bitcoin in custody. Ultimately, that's not how Bitcoin should scale, right? You should have decentralization of how this asset is managed. And so that's where we plant the flag, is that we are confident that both individuals and institutions do not want to have a single point of failure. They don't want to have one institution that manages all the keys. And so that's what we've pioneered here at OnRamp.
And just to go back to collaborative custody for a moment, whether it's 2 of 3 or 3 of 5, and please jump in and tell me where I'm wrong, because I'm, as everyone can tell by now, not the expert here. If the individual holds 2 of 3 keys and they lose those 2 keys, then their capital's gone. Is that correct?
Yes.
Okay. Jackson, appreciate your time today. Where can people find you online, and also where can they find OnRamp online?
Yeah, so you can just find me on Twitter. It's MacroJack21. On LinkedIn, you can find me if you search my name. And then if you want to get in touch with OnRamp, you can find our website, onrampbitcoin.com. Plenty of research, education. We got the OnRamp terminal for on-chain and macro analytics, if you're interested in that. And we also have several podcasts, one of which Tim I have the pleasure of having Tim as a co-host. So yeah, no shortage of ways to find us.
Awesome. Well, thanks for the time, and we'll see you online.
All right. Thanks, Tim.